Welcome back to the channel, Crypto Trend Trader here. Today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here we got the daily chart, looking at Bitstamp Exchange. And, we're basically looking for a couple things to play out. We definitely got the head and shoulder move, right shoulder formed, exactly like we talked about. Got the push up and strong rejection. Just above the left shoulder, and like we said, we were not able to invalidate by breaking up towards the head here. And immediately after we got our weekly and daily close, we started selling off. Let's switch to the weekly here real quick, and I'm gonna get some fresh charts here soon when I have a chance, as soon as I get caught up. I did just get back from my trip and everything, so I'm essentially just getting resituated. And last thing I'm worried about is all the little things. So we're going to get that all taken care of, and I'll get some fresh charts up here and everything. And as you can see, on the weekly, nothing has changed. We didn't flip. We're still red. We're in the accumulation zone. But again, doesn't mean that we're necessarily going to pump to the upside. When we're in a trend, trending in that direction, we expect to see long, drawn out periods of accumulation. Just like in an uptrend, we would expect to see long, drawn out periods of distribution. And these little guys like this, those are essentially just relief rallies, against the trend relief rallies. So you get a large distribution zone through here, you get a little relief rally, you get a little relief rally, you get a large accumulation zone, that's trend reversal. You get a large distribution zone, you get a relief rally, you get a relief rally. Now, does that mean that this can't develop into an accumulation zone like this, and then we could potentially see a trend reversal? No, it does not mean that at all. That's actually likely that that is what's going to happen, but it's probably going to happen from a lower price because we're going to continue to sell off, based on price action. So as you can see on the weekly, all three of these indicators are pointing to, bearish. Nothing has changed. Again, people get excited over a little move. We were talking about this exact move. This is exactly what I would expect to happen. This would start rolling over off that relief rally. We'll flip the stochastic slope back to red and continue selling off. Same with the VPCI. Start selling off. And again, we're starting to lose the slope on the Fisher. I would expect us to, continue and sell off here. And then on the shorter time frames, just like we were talking about, basically, we filled out that top right shoulder. We're selling off as soon as the daily close. Strong rejection coming down here. As you can see, though, we basically came up, filled out that right shoulder, and now we're selling off. And like I said, what I would expect to happen, obviously I drew this ahead of time, but basically, if that was in fact the case, essentially this is what we're looking at, something similar to this, and then I would expect us to start coming down here and sell off down here to, again, that support area, at which point, if we did find support, we could get a strong, rally and possibly gain some strength and break to the upside. But just like I said, for a third test down to the same zone, I would expect that to fail. So we basically get our head and shoulders plays out, gets rejected and sells back off, and then comes down here and attempts to, break out, and then, potentially get rejected again, potentially like get a partial move. We could have come all the way back up, get the breakout, and then sell off and get rejected at this strong resistance here, and then come back down. So we'd essentially get the pattern to play out, but it would just be weak. It wouldn't get like the complete measured move. So there's still a lot of potential. It's still early to tell. This is a 4-hour chart, and you see how much price action it takes to fill out just each one of these portions of the pattern. So this portion of the sell-off here, could last for a couple days, to basically a week down here, and then that could be our like New Year's rally, essentially, leading us up here. I mean, there's again, I try not to make too many like crazy price predictions in the future and everything. I just call things out based on seeing like hundreds or thousands of the same chart patterns or situations, playing out. And the truth is, with all this stuff, there's only so much information. that anyone can use to analyze any single asset. So, all the indicators in the world and all the oscillators in the world and all the technical analysis and, support, resistance, this, that, and the other, everybody's analyzing the same basic information, and there's not that much of it. It's just a matter of how you present it so that it's easily understandable. And that's what these indicators are all about. Like, that's what all indicators are all about. Making it easy to just glance at an asset, not know what the asset is, what the news is, anything like that. Just being able to look at a chart with those indicators or with those oscillators or with that resistance, support, etc., whatever it is you choose to do, just to be able to look at a chart quick and analyze it in a reasonable amount of time and get an idea as to what's potentially going to happen based on previous situations. But that's all any of this is. That's all trading is. It's essentially just recognizing patterns psychologically, market cycle patterns, percentage sell-offs, after people take profits, etc., etc. But I mean, in the end, there's only so much information in any space that can be analyzed. So don't rule any of it out just yet because somebody told you that one thing's not good or something else is better. Because honestly, if you can find an edge, trade your own edge and don't worry about what anyone else thinks. I know I don't, you know what I mean? Because when you worry about what other people think and you try to do exactly what someone else is doing, that's when you fail. Because no two people are alike, no two traders are alike. You're not going to be in the same situation. You're not going to have the same goals, the same finances, etc. So the most important thing is to honestly just find what works for you and continue to improve on that. And that's going to put you in the best situation. Rather than just straight up listening to someone else who tells you no, don't do this, or yes, do that. Like, there's a lot of things you can say that about, but you can't say like a specific indicator or something like that. I mean, a lot of these guys, in this space, the majority of the people, that do technical analysis or trade, etc., have come from traditional markets. And this is not traditional markets, and things are way different than traditional markets. And the patterns play out differently. Price action reacts differently. There's stuff in here that, they've never seen and been taught and experienced before. So don't think for one second that crypto is similar to these markets. In many ways it's similar, but in many ways it's a completely different animal. So, be careful who you listen to, I guess is all I'm saying. This is not financial advice. I'm not your financial advisor. I'm literally just sharing my input and my insights and some of the hard lessons I've learned over the years trading and investing, etc. So anyway, let's keep moving on. As you can see here on the 4-hour, we still have plenty of time before it closes, but we're starting to get the hard sell signal here. And what I would expect is off that hard sell signal, we're going to get that strong continuation. And you can see these indicators are just doing absolutely beautifully. I really do encourage you to just check out some of the different indicators posted up and just kind of get a feel for them and look at how they react with each other, how they coincide with each other, and try to use like a couple of different ones. I try to always have one volume indicator at least, but whatever works for you. But essentially, you just try not to get too many indicators that are always lining up. Try to find ones that don't always line up, and then when they do line up, it's a very, very powerful buy or sell signal. So, but anyway, as far as the technical analysis concerned, nothing has changed at all. We're basically just coming down underneath here. We essentially got rejected off of this push up here. I would expect us to come down and essentially, get some kind of reaction off this heart line, the green heart line here, and then basically just come back down, test this strong support area, and if we break the 7,000 area, I think we're going to dump straight back down and get this measured move, right down here, fill out the right shoulder, and then if we can get a strong move up from there, I think we can come back up, fill out this pattern, and potentially get that move to the upside. But if we come down here and this doesn't hold this support now for the third time down here, I mean, honestly, the diagonal red trend line is going to act as some support, but what I would expect to happen is, we would basically, we would basically come back down here to the bottom of the channel, and we touched into the green area and look at the move we got off of it. But at this point in time, realistically, I would expect us to come all the way down to the bottom of the channel itself, and really get down to like the high 5,000, low 6,000 range. And that could be like, that could be a potential reversal point for the entire market. I mean, it could be a key fib level down here in the 5,400 range. But at this point in time, we've been in this channel for months, and we could stay in this channel for months. And the price action inside of this channel can still be massive. We can get some amazing moves. So don't don't get too caught up thinking that we have to get like a macro trend reversal, on this essentially consolidation. This is not necessarily a bad thing. This can be a healthy consolidation as long as when it's all said and done, what we want to see for our long-term technical analysis, when it is all said and done and we're looking at this thing, the most important thing that happens is that no matter how much we sell off here, that we do not take out this low. As long as we don't take out this low here, this can all be bullish consolidation and move to the upside, take out the high, and continue moving to all-time highs. The only thing that will legitimately worry me about this asset class and the real future of Bitcoin in the next 3 to 5 year time frame rather than 6 month to 1 year time frame is if we capitulate and we sell off to a new low down here, then that means that we're still in this same downtrend. But if we come down here and we put in a higher swing low, because on this macro weekly, we haven't put in a swing yet. This isn't a swing yet, but it could potentially be. And that could be our swing low, and that's a higher low, and then we could macro try to take out this high and then this high and move to the upside, and that's great. And I think that's has a very high likelihood of happening. But it's also possible we continue to sell off, we get any kind of price movement, any kind of price action in this whole range is irrelevant to the macro trend, to the long-term, 3, 5, 10-year trend. This whole area is all irrelevant. What matters is when we sell back off here and we finally do reverse, whether it's here, whether it's here, whether it's all the way down here, that's all fine. But if we take out that low is when I will legitimately be concerned for this asset class in the longer, macro time frames. Again, that does not mean that, 10 years from now, 20 years from now, it's not going to take out the high. But it changes things on the, longer term macro. As we're in the short term macro, nothing has changed at all until we essentially take out this high right here, because we don't actually have like a swing, because somebody could have said, oh, this is the swing, and then look, it was a failed swing. And then you say this is the swing, and if we don't take out this high here, it's essentially just a failed swing, and it's just a series, a high, a lower high, and then if we do not take out this right here, this clear swing in the market on the weekly time frame, we cannot, if we don't get above that, say that we got a higher high on the swing. And the same thing is the case to the downside. And that's some longer term technical analysis. And again, I would expect this green to continue, and we could potentially even capitulate. You see, it was already green in this area, and we're capitulating. It was green through this whole area. We consolidated, got a powerful move up, and then from that powerful move, we still got a massive sell-off. So at this point in time, we cannot get bullish on this market. The best thing to do is stay bearish on this market until it gives us an indicator and a sign not to be. Keep in mind that all that's happened here is this was a huge support on the way up. Huge support here. We lost that support, and now we are trading. We're trying to get above that support, and we're failing. The entire market is failing to get above that support. So if we don't break above that support, that's one. We broke down below it, and 1, 2, 3, 4, 5 times, and now this is the 6th week in a row we're attempting to get back above that support. And if eventually, if we don't get above it, we're just going to sell off, because that's a clear indication to the market that there's more selling than there is buying. And that's when you would expect first main target just based on horizontal support, 6,000 range, low 6,000s, 5,900, and then we could expect somewhere in this range, 5,100. And if it continues to sell off, that's our 3,400. And anything below 3,400 to me is basically the danger zone, like for real danger zone. So but at this point in time, nothing's changed on the long-term time frames. I'm seeing people get all bullish and taking these reversal trades to the upside, and that's not how you're going to make money. If you want to take a little scalp like we did through here, that's fine. You know what I mean? You want to trade this little guy inside of here, but keep in mind the moves to the upside are going to be minuscule compared to the massive sell-offs. And again, I have a feeling that it's coming. We're going to come back down here, I think, and we're going to test this 7,000. And when you take out that low, and everybody's trying to get bullish off of that swing, being a higher swing. But if we sell right back off here, we could take that out right now, and then we never put in a higher swing. See, people are just zoomed in so much that they're not realizing that this isn't an actual swing in what you would count as a trend.